What if you could profit 3 times as much when the stock market falls? That is exactly what SPXU promises, and yet this fund has lost more than 99% of its value since launch. Here is what is really going on. SPXU is the ProShares UltraPro Short S and P500 ETF. Issued by ProShares and trading since 2009, it is designed to deliver 3 times the inverse of the daily performance of the S&P 500. So if the index drops 1% in a day, SPXU is engineered to rise about 3% that same day. The fund holds around $1 billion in assets and is one of the most heavily traded inverse ETFs on the market. Volume spikes whenever traders expect a sell-off, which is exactly when SPXU sees its biggest inflows. Under the hood, SPXU does not actually short stocks. It uses total return swaps and futures contracts on the S&P 500 to manufacture the negative 3 times exposure. That exposure is reset every single trading day. This daily reset is the most important fact about this fund, and it is also the part most retail investors miss. Here's the catch. Because the leverage resets daily, your returns over more than one day are no longer minus 3 times the index. They are the geometric product of every daily return, which mathematically grinds your value down in any market that is not a straight line drop. This is called volatility decay, and it is built into the fund by design. To see why, imagine the S&P falls 10% one day, then bounces back roughly 11% the next day to break even. SPXU rises 30% on day 1, then falls 33% on day 2, and ends up well below where it started, even though the index closed flat. That math runs against you every single day you hold the fund. The performance proves it. Since launching in 2009, SPXU has lost over 99% of its value, even with 3 brutal bear markets along the way. The fund has done exactly what it was built to do on any given day, but compounding has destroyed it over the long run. So who is this fund actually for? It is built for active day traders who want to make a tactical bet that the market will fall in the next few hours or the next few days. It is not built for hedging your retirement account, and it is absolutely not built for buy and hold investors waiting for a crash. The honest reality is that SPXU is a trading tool, not an investment. The expense ratio of about 0.95% is high. The decay is constant, and time is working against you the moment you buy. If you have ever held an inverse ETF for more than a single day, drop a comment below and tell us what happened. If this breakdown helped, hit like and subscribe so you do not miss the next ETF deep dive.